Welcome to Business Line's State of the Economy podcast, where you'll find insight, analysis, and the story behind the numbers.
Hi, and welcome to Business Line State of the Economy podcast for this month. I'm Aarati Krishnan, and today we are going to discuss the equity market outlook. Today we have with us Ms. Roshi Jain, who manages over $5 billion in assets with one of India's largest mutual funds, HDFC Mutual Fund. Roshi was with Franklin Templeton before this. She is a chartered accountant, a chartered financial analyst, and an alumna of IIM-Ahmedabad, and has close to 2 decades of experience researching stocks and managing funds in the Indian market. We are seeing a return of inflation, particularly in food, due to this patchy monsoon. So how are you positioning your portfolios for this? So in the long run, people say that equities are the only asset to beat inflation. But in the short run, inflation can damage growth and earnings, right?
Thanks, Aarti. Yes, food prices are on an inflationary trajectory. They do tend to be volatile, though, given the dependence on monsoons and weather conditions. And inherently, given the unpredictable nature of weather conditions, I think it's difficult to take a call on how long the inflationary pressures from food can last.
Right.
However, I do think that the government has been preemptively taking measures to address supply side issues. The RBI, through monetary policy, is working to address the demand side pressures on inflation. Yes, I think there is a two-pronged approach to deal with the inflation on food. In the short term, inflation can have an impact on consumption spending, and therefore it will impact the growth for certain companies. But if we are able to construct a portfolio with companies that can traverse such transient issues without it impacting their long-term competitiveness, I think then equities will be the asset class that will beat inflation.
Right. So has this bout of inflation seen you make any revisions to your earnings outlook for the next year?
To my mind, the important thing is to be able to assess whether the long-term competitiveness growth outlook of companies in our portfolio is impacted.
Right.
As of now, based on what we are seeing at this point in time, and also given the preemptive measures that both the government and the RBI is working on,
Right.
we see little reason to change any of our long-term projections. Near-term projections is something that we pay less attention to,
Right.
but nothing so far has made us change the long-term projections on our portfolio companies at this point in time.
So you were among the early fund managers to spot value in domestic banks, particularly PSU banks in this cycle. I remember a few years ago, they were completely in the doghouse and trading at very low valuations. But lately, we've seen a rally in this set of banks on the back of a reviving credit cycle. Credit offtake also has been in the double digit for many months. Now, banks are also a big weight in the index. So how do you view the sector today? I mean, is there a runway to grow further, or are we at a kind of a peak valuation scenario?
So I do think that select banks, due to their long-term competitive advantages, will continue to do well, and the sustained economic growth itself will provide growth runway for these banks.
Yeah.
In general, I would say that bank balance sheets are well capitalized. Asset quality for the system stays particularly healthy. And if you put that alongside the growth outlook for the economy, I think there is still earnings growth that we can expect from the banking system. Valuations also are attractive in the context of these growth levers and the competitive situation. So yes, I think the sector, to my mind, continues to still provide reasonable upside over the long term.
Right. So should investors make a distinction between PSU and private banks? Earlier, that divide was very sharp, but today I think the outlook for the two sets appears somewhat identical, right?
So the way I would address this question, Aarti, is like this. I think that ownership is only one dimension of a company, and there are many other dimensions that we need to consider. So if we are talking about banks, then there are nuances as far as banks are concerned. If we are talking about PSUs in general, there are other factors to be considered, like the sector dynamics, competitiveness in that sector, and so on. So I would only say that we need to evaluate each company on its own merit and take a rounded view of the company, ownership being one of the dimensions that we need to consider.
Right. So my next question is also linked to this. So a key driver of HDFC FlexiCap's recent outperformance has been early positions in PSU stocks. And PSU stocks, particularly in sectors like defense and recently railways, they've seen a substantial re-rating in the markets in the last year or so. There's news about order flows and capex, government-driven capex, and so on. But in the past, if you see, some of these PSU rallies have been short-lived and they have sort of petered out quickly. So a lot of people are skeptical about whether it can sustain. So do you see structural changes happening in the PSUs that you track, which justify this valuation improvement that we've seen?
So again, I'll answer it in two parts. I think first is the business cycle of the sectors that some of these PSUs are present in. These sectors inherently tend to be a little bit more capital intensive, infra, capex oriented, and therefore business cycle plays a significant role in performance of these companies. Now, as we see a cycle which is more in favor of infrastructure, private capex pickup, etc., I think the business cycle part of the question of the equation at least seems to be in favor for the next few years. Then comes the company specific aspect. And I think that will involve analysis like we do for any company. Look at the balance sheet, look at the competitiveness of the company in the sector and so on. And there will be some PSUs which stand very favorably. There will be some that perhaps don't stack up that well, just as how, it would be for any private company as well. So instead of generalizing and saying that and juxtapose the past performance with the future, we need to look at them on their own merit. There will be some PSUs which merit presence in the portfolio on account of their long-term strength. There may be some which perhaps are a little bit more tactical and need to be sort of acted upon in that light. So I wouldn't take a very generalized approach. I think it needs to be stock specific.
Right. Rather than take a view on the broad theme, you feel that looking at specific companies is a better approach, right?
That is true. Yes.
Yeah. So, as the manager of HDFC FlexiCap, you need to take this relative call also on the allocation between large cap stocks, mid cap stocks, and small cap stocks during different market phases. So, how do you take that call? I'm asking this because today, if you look at the AMFI data on mutual fund flows, the bulk of the mutual fund flows are actually happening into the small cap funds, and in fact, there were even outflows from large cap funds. So, what do you think of this, and how do you actually go about deciding on this allocation between these three segments?
So as far as the FlexiCap fund is concerned, per mandate, we don't have any limits on allocation to market cap segments. And therefore, for us, the main criteria becomes availability of opportunities that fit our framework of growth at reasonable price. We are agnostic to market cap. We will look at stocks on a bottom-up basis, and those that fit our framework will find a place in the portfolio. At this point in time, we have a higher allocation relative to the benchmark in larger cap stocks because we believe that the risk reward in larger cap names is more justifiable at this point as compared to the risk reward in mid and small caps. Yes, you are right. Recent flows into the small cap funds have been quite strong. But given that the FlexiCap is able to navigate across market cap segments, it's easier for us to make allocations because for us, the criteria is not a particular threshold that we have to achieve, but we can just choose across market cap segments names that fit our framework.
on relative valuations between these three large cap, like large cap and small cap, large cap and mid cap, you don't consciously look at relative valuations, is it, in deciding your allocations?
We look at relative valuations, not across large, mid, and small. Rather, let me put it this way, that each stock, of course, has its own growth, margin, return characteristics. And so therefore, for us, the way to identify whether a stock is to be added to a portfolio or not is to evaluate it on its own merit. We don't have to necessarily buy into a stock because there is a certain threshold of large, mid cap or small cap that we need to achieve. Therefore, we are able to look at them in a more holistic way, as opposed to just restricting our universe to either small or mid cap.
So typically in India, whenever general elections approach, those years have been very volatile years for the equity markets, especially in the run up to the election with the exit polls and news about who's winning, etc. coming out. Your markets tend to have extreme swings. So as an equity fund manager, how do you approach such an event? I mean, do you actually take cash calls in the run up, or do you sort of position yourself in more defensive stocks? What do you really do when such event risks are around the horizon?
The way I think about it is like this. I think equities for us is a long-term instrument, and we are long-term fundamental research-oriented investors. And I think in that long-term investing continuum, there will be several events which will cause volatility, but they do not necessarily alter the long-term trajectory of a company. So I believe that as long as we stay disciplined to our investment philosophy, to our process, we should actually be able to take advantage of any short-term volatility in order to create long-term value for our investors. At least that's the broad approach we take for some of these events, which can cause a lot of market volatility, but in the long-term scheme of things, really they may appear as a blip, and therefore that does not become a key factor for us in sort of thinking about stock selection. The approach really is always mostly bottom-up driven, which is that we look for companies that are able to traverse such events, and not their long-term competitiveness doesn't get impacted. I think with that philosophy in mind, volatility actually becomes something that we can take advantage of rather than be wary of.
So, I mean, going by that, even individual investors, I suppose, if they have a long-term horizon, should not make too much of such events, right? So, if you're doing an SIP, you should perhaps continue with it. That's the message, isn't it?
Absolutely, Aarati. Yes.
Yeah. The global scenario is also somewhat turbulent, and we've seen this worries about slowdown and interest rates going up. So does that affect the outlook for Indian stocks? Do you see the possibility of some correction or volatility unleashed by those events?
In the shorter term, yes. Also because capital flows tend to be sort of correlated. So any risk of event in any other part of the world does tend to have some impact in general globally. But also in the near term, there could be some growth shocks that flow through to the Indian economy as well via several channels. Inflation we talked about, it could be via slower growth in the export-oriented companies and so on. And also given the fact that valuations are sort of, given, I mean, they're not exactly cheap. I think that will create some volatility. But again, I would only say this, that for longer term investors, the important thing is that we stay disciplined to our investment philosophy, to the way we construct portfolios. More so than ever before, just given some of these challenges that exist both globally and which could have some impact on local markets as well.
That will be all, Roshi. Thank you so much for joining BL and giving us your
Thanks, Aarati, for having me.